Welcome to TalkTickers. Today, we're diving straight into the HubSpot Q1 2025 earnings call. We want to really get under the hood, see what's driving their performance.
Absolutely. And HubSpot certainly gave us plenty to talk about. They reported a robust first quarter.
Robust how? Give us the highlights.
Okay, so revenue.
Yeah.
It grew 18% year over year. That's in constant currency, which gives you a cleaner view.
18%. Okay.
And customer growth was strong too, up 19%. They're now over 258,000 customers globally.
Wow, that's a lot of businesses.
It is. And they added over 10,000 net new customers just in Q1.
10,000 net new. And didn't they announce something about shares?
Ah, yes. Big news there. The board authorized their first ever share repurchase program, up to $500 million.
Their first one. That usually signals some confidence from management, doesn't it?
Often does, yeah. Belief that the stock might be undervalued or just a way to return capital.
Okay, so strong top-line growth, strong customer adds, a buyback. What were the key drivers behind these Q1 numbers?
Well, they pointed to three main things. First, this idea of platform consolidation.
Mm-hmm.
Second, they're pushing more into larger deals, what they call upmarket expansion.
Right.
And third, continued strength in acquiring smaller businesses, the downmarket segment.
Okay, let's break those down. Platform consolidation. What exactly does that mean in HubSpot's world?
It means customers are increasingly buying the whole suite, not just Marketing Hub or Sales Hub, but multiple hubs, sometimes the whole platform.
And why now? Is it about AI? Costs?
Both, I think. A unified platform makes it easier to layer in AI across everything. Plus, consolidating tools can definitely save businesses money, simplify their tech stack. They actually mentioned that more new Pro Plus customers, that's their higher tier, started with the full platform this quarter than ever before.
That's interesting. Sticky customers, presumably.
Very sticky. And it ties into the Pro Plus adoption generally. Over 37% of their ARR, their annual recurring revenue, is now from customers with 4 or more hubs.
Okay, significant. And what about those larger deals, the upmarket push? How's that going?
Pretty well, it seems. Large deal growth was up 23% year over year.
23%. Nice. What's attracting those bigger fish?
They're rolling out more enterprise-grade features, things like sophisticated journey orchestration in Marketing Hub Enterprise, better sandbox capabilities for testing, new data centers, Sydney, Oregon, Montreal. Stuff larger companies need.
Makes sense.
And their partner co-selling really jumped, up 41%. So they're leveraging partners effectively to reach those bigger clients.
41%. Wow. Okay, so that covers upmarket. What about the downmarket? You said strength there too, despite, the economic uncertainty everyone talks about.
Yeah, they seem to be navigating that well. They mentioned some pricing changes, improvements in converting free users to those starter plans.
Making it easier to get started.
Exactly. And offering flexible monthly payment options probably helps smaller businesses with cash flow too.
Right.
Plus, their core CRM, the free tools, the basic seed offerings, they seem to be getting traction beyond just the typical marketing and sales roles within these smaller companies.
So overall, how are they framing their value proposition in this uncertain macro environment?
It's very much about value and efficiency. The message is use HubSpot to consolidate your tools, cut costs, get more efficient. That resonates when budgets are tight.
Definitely. Okay, let's shift gears to AI. It feels like that's everywhere now. What's HubSpot's angle?
Their big thing is embedding AI across all their hubs, not selling it as a separate bolt-on, but weaving it into the existing products.
Integrated AI.
Right. And they've made acquisitions like Frame.ai and Dashworks to speed that up. They're saying this is already boosting adoption of Content Hub and Service Hub.
Any specific AI tools gaining traction?
Oh, yeah. Copilot, their sort of general AI assistant, adoption more than doubled just in Q1. Over 660,000 users now.
Doubled. Wow.
And their more specialized agents are moving fast too. Customer agent for service tasks. Adoption doubled in 3 months.
And is it actually working?
They're citing average resolution rates over 50%, some users seeing 80%. And get this, customers using it resolve tickets 39% faster.
39% faster. That's a real productivity game.
It absolutely is.
Yeah.
And their prospecting agent for sales is now in public beta with over 2,300 customers kicking the tires.
And I saw something about customer agent expanding.
Yes. Big move. Starting June 2nd, it won't just be in Service Hub. It'll be available to all Pro and Enterprise customers across every hub.
Across everything. How are they pricing that?
It's going to be a credit-based system. Pro and Enterprise subs get a monthly allotment of credits included. If you need more, you can buy them.
A consumption model on top of the subscription.
Kind of, yeah. They plan to extend this credit model to other AI agents and features over time, but they were quick to say they don't expect it to materially impact revenue in 2025.
Okay, good to know. So it's not just about existing AI, they're innovating too. What came out in their spring spotlight?
A lot. Over 200 new features. The main themes were, again, embedding AI, better multi-agent orchestration, getting these AI tools to work together smoothly, and more upmarket scalability.
Any standout new features?
Well, they introduced a knowledge base agent. It works alongside a customer agent, identifies gaps in a company's help docs, and can even draft new articles.
That's clever.
Yeah.
Using AI to improve the inputs for other AI.
Exactly. They also added more enterprise stuff like lookalike lists for marketing, advanced journey automation, multi-account management, and their Agent.ai ecosystem, where people can build their own agents, is apparently engaging over 1.7 million users.
Okay, seems like a lot of momentum on the product and AI front. Let's dive into the detailed financials now. How did the revenue break down?
Sure. Subscription revenue grew 16% year over year. Services and other revenue was up 13%.
And geographically?
International is becoming really significant. It's now 47% of total revenue.
Nearly half. Okay. What about revenue per customer, ASRPC?
Average subscription revenue per customer was $11,000 in Q1. Now, that was actually down 4% as reported compared to last year.
Down. Why is that? More smaller customers coming in.
That's part of the dynamic, yeah. With strong net adds, especially in the down market, it can temporarily pull the average down. They expect net additions to moderate a bit, maybe around 9,000 per quarter going forward, and for ASRPC growth to be roughly flat for the next few quarters.
Okay, so managing expectations there. How's customer retention holding up? That's key for subscriptions.
Still strong. Customer dollar retention remained in the high 80s.
High 80s, okay.
And net revenue retention, or NRR, which includes upgrades and expansion, was 102% in Q1. They expect that to tick up a couple of points for the full year 2025, driven partly by that new seats-based pricing model encouraging upgrades.
102%, so growth from the existing base. And billings, any signals there?
Calculated billings look healthy, grew 20% year over year to $767 million.
Good forward indicator. What about the bottom line? Profitability, cash flow.
Non-GAAP operating margin was 14%. Non-GAAP net income came in at $96 million, or 1.78 cents per share.
And cash.
Free cash flow was solid at $122 million for the quarter. That's about 17% of revenue. They finished Q1 with a hefty $2.2 billion in cash and marketable securities.
Strong balance sheet. And that connects back to the share repurchase right
Exactly. That $500 million program will help offset potential dilution from settling some convertible bonds they have. Uses that cash pile strategically.
Got it. So what guidance did they give for Q2 and the rest of the year? Did they raise their outlook?
They did raise the full year outlook. For Q2, they're guiding for revenue between $738 and $740 million.
Yeah.
It's about 16% year over year growth.
Okay.
Non-GAAP operating profit for Q2 expected around $124 to $125 million for a 17% margin, and non-GAAP EPS between $2.10 and $2.12.
And the full year raise.
Yep. They bumped up the full year 2025 revenue guidance, now expecting $3.036 to $3.044 billion. Still around 16% growth year over year.
And profitability for the year.
Also raised. Non-GAAP operating profit now guided to $558 to $562 million, an 18% margin for the full year. And non-GAAP EPS expected between $9.29 and $9.37.
So raising guidance across the board. And free cash flow.
Full year free cash flow expected around $570.
There was also a leadership change mentioned.
Yes, a notable one. Brian Halligan, the co-founder, is stepping down as executive chair. He'll remain on the board, but Lori Norrington is taking over as board chair.
Interesting transition. Anything else significant? They mentioned Agent.ai and something called MCP.
Right. Agent.ai is their big vision, letting users build their own AI agents. MCP, the Model Context Protocol, is kind of the plumbing for that.
Plumbing.
Yeah, think of it as a standard language for AI apps to talk to HubSpot's backend and for HubSpot to talk to other systems using natural language. They launched public beta server support for it. It's about making integrations much easier and more powerful.
So opening up the ecosystem, and how's that shift to seats-based pricing going?
Sounds like it's progressing well. They said it's driving seat upgrades and helping that net revenue retention number we talked about. They expect most customers will be migrated over by the end of this year, 2025.
Right, a big transition almost complete. One last thing, they seem to be using their own AI tools quite a bit internally.
Oh, absolutely. They highlighted that. AI apparently resolved 41% of their internal support tickets in Q1, let them keep support headcount flat for 18 months despite growth.
Wow, 41%.
Yeah, and AI helped their sales team book nearly 11,000 meetings in Q1. Marketing saw email conversion rates improve up to 80% using AI. Even developers are using it for productivity gains.
So they're eating their own dog food, so to speak.
Definitely. It shows they believe in it and are finding real value themselves.
Okay, fascinating stuff. Time for our This Is Not Financial Advice segment. Based on everything we've just discussed, what's a slightly out there but maybe plausible trade idea?
All right, purely hypothetical, of course. But think about this. HubSpot is pushing hard on AI agents, improving productivity, especially in customer service, right? Resolving tickets faster, handling more volume. So here's the thought. What if you considered shorting some of the more traditional pure-play customer service software companies? The ones that maybe haven't integrated AI quite as deeply or quickly across their platform?
The thinking being HubSpot steals share with its AI-powered integrated offering.
Potentially. If customers start prioritizing these built-in AI capabilities and the efficiency gains they offer, like that 39% faster resolution time, it could put pressure on standalone tools that feel less advanced. It's a bet on platform consolidation accelerated by AI. Again, just a thought experiment.
Interesting angle. A bet against the legacy players potentially being disrupted by integrated AI platforms. Okay, that wraps up our deep dive into the HubSpot Q1 2025 earnings call.
We covered the solid results, the growth drivers like platform consolidation and upmarket moves, and that heavy focus on embedding AI everywhere.
Plus the financials, the raised guidance, and that interesting internal use of AI. Remember, everything we've discussed today is purely for informational purposes. It is definitely not financial advice. Always do your own research.
But we are curious what you think. What's your take on HubSpot's AI strategy? Do you see these AI agents as a game changer? Let us know. Join the conversation.